Hello sector watchers, welcome to the show. This is the 137th episode of Sector Spotlight for Tuesday the 26th of July, and I'm recording it on Monday the 25th. My name is Julius de Kempenaer and I'm presenting to you from Amsterdam in the Netherlands. Contact details are on the screen in case you want to share anything, have questions or want to reach out anyway. For today, it's actually a very exciting show, I think, because we have, StockCharts have listened, I have listened to you and StockCharts have listened to me. So that's probably the best way to say it, because I'm going to keep it a secret for a little while. Today we're going to start with the usual overview of asset classes. I'm going to try to keep that short. Then I want to spend a little bit more time on sector rotation, current sector rotation. And then after that, we're going to look at RRGs for intraday timeframes. Believe it or not, after many questions, we now have relative rotation graphs for intraday timeframes available on StockCharts.com. I think that was on the wish list for a lot of people, so it is now there. I will show it to you today and try to talk about it a little bit more, and at the same time I'm going to use the occasion to explain a little bit more, or again, the relationship between the tail lengths and the performance numbers, because from time to time I still keep getting questions on how to read that, what does it mean, etc. And now with the introduction of intraday timeframes, we have a new level that we can discuss. So I'm going to use the opportunity to talk about that again. Ladies and gentlemen, this is Sector Spotlight. At the asset class level, there are no major changes, I have to say. What we have seen over the last few days on the RRG on the right-hand side is that the improvement for commodities, DJP and GSG, is continuing. They have managed to travel out of the lagging quadrant into improving again, and they're definitely picking up relative momentum and a little bit in terms of relative strength, RS ratio. Compare that with the weekly tails on the right. They're still at very high levels, so there is plenty of room for both weekly tails on GSG and DJP to curl back up while inside weakening, meaning that they can complete the rotation completely on the right-hand side, underscoring the strong relative trend that commodities are currently going through, and that is confirmed, or the daily rotation for DJP and GSG is getting back in line with such a rotation. Maybe we need a little bit more, but I think that the longer term turnaround for commodities is still inevitably there, and I don't think it's going to change anytime soon. So as usual, because they are so disconnected from the other tails, I'm going to switch those tails off on the RRGs, which gives us a better view in what's happening on the other asset classes. And I think the most important or the most notable rotation here is the one for the US dollar. If you look in on the weekly RRG, you can see that it has the highest reading on the RS ratio, but it's moving lower and hitting the weakening quadrant. On the daily RRG, that has happened already a couple of weeks ago, and the US dollar is now traveling on a long tail, which means that it's quite a rapid move in that time frame and moving towards the lagging quadrant. Given the longer term picture, and we'll look at the price chart in a minute, I think that this fits perfectly the scenario of a little pull down for the US dollar after a strong rally, but in no way yet a turnaround of that rally or the end of that rally. So long term, I think that US dollar strength is still on the cards and we are currently going through a setback. The rotations for stocks and the fixed income asset classes is the tails are much shorter, as you can see here. So SPY, high yield, government, corporate bonds, they're relatively short. You can see that it looks as if stocks are picking up slightly, although they're still inside the lagging quadrant. That's the weekly time frame. And if you look on the daily tails, then the more riskier assets have had a good week. So stocks, SPY, high yield is closest to stocks in terms of the fixed income. That's the high yield segment of the market. And then we've got real estate, V&Q, which has been doing pretty well. And on the weekly, you see that it is hooking back up. It's very early stage, but you can see a little bit of improvement on the daily. And you can see that government bonds have moved into the lagging quadrant again. Makes the rotation, the relationship between stocks and bonds still kind of stable. And I've got the chart of SPY IEF in a minute for you, but also the chart of VBINX, because we always talk about that benchmark. We always talk about VBINX benchmark, which is a 60-40% balanced index fund. But we can also look at that chart, and I think there's an interesting pattern, an interesting development going on that VBINX chart that we can relate to what's happening in SPY and IEF. Okay, let's go to the US dollar index here. You can see that massive break. We've all seen that. There's nothing wrong with that. It's still very valid and that trend is still intact. If we look at the relationship of the euro versus the dollar, which I think is a little bit more tradable, gives a little bit more insight about how traders are positioning themselves, then obviously we had that massive rally for the dollar, decline for the euro when we dipped below that 103.50 area, briefly traveled below parity, below €1 for 1 US dollar, and now we rallied. But as you can see, the last 4 or 5 days, the highs were set around 102.75. And I think that's important because that means that the pullback didn't even bring euro dollar back to the breakout level. So, usually when you break support, it becomes resistance. So that 103.50 area is expected to return as resistance in case of a pullback. Now, it can still happen. However, the longer it takes for euro dollar to go back above 102.80 and go back to 103.50, the more difficult it will become. And if I look at this chart here, it definitely looks as if sellers are coming back around 102.75. And if they're strong enough, then we will see another leg lower for euro dollar, potentially again breaching parity level, and then maybe even stronger than before. If we look at SPY, then last week we talked about growth taking over for value, question mark for how long, and that rotation, that thing is still going on. We look at the sector rotations in a minute, but if we look at SPY, then we see that it broke the 390, 393 area, which was a intermediate resistance level. And it looks as if we're now putting in a new high around 400. Mind you, 407, 110, 410, 415, these are all resistance levels on the way up. So even if we go up, it will be a difficult ride for the S&P 500. And given, if you just look at this chart, it's all happening within that longer term downtrend that's still in play. Whether we have seen the turnaround already or not, I don't know. For the time being, I'm calling this a rally within the downtrend, especially if you look at the weekly chart of the S&P 500. Now, an interesting chart for IEF, that's the 7 to 10 year treasury bonds. It bounced off support that was coming off that 2018 low. Is a very important low. The relative strength improvement is clearly visible, but what what is definitely a possibility, and I do have to change this chart to a daily chart to make that more clear, is that we could have another Head and Shoulders reversal in the making. And I'm going to be conservative here, but when IF breaks above 104.50, 105, I think we could be in for a rally of about 5.5 to 6 points on IF. That would mean a pretty serious decline in interest rates, in yields, in 7 to 10 year yields, and a rally in bond prices. And that is interesting to watch, especially when you take into account, when you want to make up your mind about stocks versus bonds, because SPY IF right now is sort of sideways. We have lower highs coming into place. We're challenging that 3.6 level if you take the straight ratio of SPY versus IF. If IF is going to rally, and if IF is going to rally stronger than SPY, then it will eventually break below that 3.6 level, which makes bonds much more attractive than stocks. It's quite early, but I thought that was worth mentioning because I do think that this is shaping up like something that could be a temporary low in the making. Now, if you look at VBINX, the chart itself, then there's something interesting going on. That downtrend is, if you just look at lower highs, lower lows, then you could debate whether this was a previous high and we're breaking that series. I think we're definitely breaking that lower, that falling trend channel, and there is some upside there, and you see that there is a positive divergence in the RSI that is helping. And if VBINX is going up, given what we see on the SPY and IF charts, I think that this chart could be driven higher by a strong bond market in coming weeks. That's the thing that I'm going to watch on an asset class level. The current sector rotation is moving ahead along the same path as we identified last week, which means that the defensive sectors are going through a setback and more growth-oriented sectors like technology and consumer discretionary are picking up. The question remains, how long will this sustain? We have a look at the RRGs, which is the daily on the right-hand side and the weekly on the left-hand side. Then the tail for XLE, the energy sector, I think is very important and very interesting to watch, because on the weekly, it's the long tail that is traveling through weakening, but still at the highest RS ratio. And we have identified already a couple of weeks ago that this is still a very strong sector with a very strong relative uptrend, but it's going through a setback. If you look at the daily tail, then you can see that it is now rapidly traveling through the improving quadrant at a strong RRG heading, moving towards leading. And I'm going to bring in the price chart in a minute, but I think that the energy sector may have made its low and is starting a new relative and price up lag. So we're going to look at the chart in a minute. For now, I'm going to switch that tail off to give the other ones more space. And what we then see is the defensive, so healthcare, staples, utilities. These are all going through a setback. They're still on the right-hand side, but they're going through a setback. And that's confirmed here on the daily, where you see utility, staples, and healthcare either inside lagging or very close to crossing over into lagging, which is healthcare, which is the lowest one. On the other hand, we have discretionary and technology inside improving on the weekly RRG at a strong heading. And we see that back here on the daily RRG, where both discretionary and technology are inside the leading quadrant, with technology already starting to lose some relative momentum. But that is pretty much confirming the rotations as we see them on the weeklies. One that needs attention as well, and that's communication services. It looked for the last couple of weeks as if it could improve, and it was improving, but since 2 weeks it has now started to roll over, and on the weekly it's already rolled over inside the improving quadrant. But look at the daily. Here you see the XLC tail. There it rolled over on the right, on the left hand side after a little attempt to move higher, but that is now moving lower. So communication services is now back into a serious relative downtrend. Let's look at some individual charts. As I said, energy, the energy sector, we went through a sharp decline, but that old resistance level has now acted as support, and it seems to be working. And the turnaround here in relative strength is very visible, and it's about time that we need to start seeing an improvement in relative momentum. And when I change the chart to a daily, then I will reflect what you saw on the daily RRG, and you can see that that improvement is already starting, and the shorter term looks like a bottom formation is being put into place here, making the energy sector about to start a new up leg, both in price but also in terms of relative strength. How different is the story for communication services? That downtrend is still fully intact. That's also the case with the downtrend in relative strength. We had a period of sideways movement, and that's when the RS momentum started to pick up and move above 100, looking as if some improvement was on the way. But right now, relative strength is dropping below its previous low, basically reigniting the relative downtrend, and that's going to drag the momentum down and the RS ratio line as well. And all of that is resulting in that tail rolling over inside the improving quadrant. Now here's for the defensive sectors. So here's healthcare. That uptrend still intact, but you can see the rolling over of the RRG lines indicating a setback for relative strength. With those current high levels, or those high readings of RS ratio, there's not an immediate risk of this thing turning into a relative downtrend. So for the time being, I'm going to judge this as a temporary setback within the longer term uptrend. And basically the same is happening with the staples sector. You see that it is, well, sort of moving sideways. That's dragging the RRG lines lower, but it's not a turnaround yet. And if you look at the price chart, then obviously this deteriorated, but we're not, well, compare it to the communication services as we just saw it, it's not nearly as bad as communication services, a few of the others. So here also for staples, normally a very quiet sector, also going through a temporary setback within this longer term uptrend. And the same goes for utilities. Nice attempt for a breakout. It's playing around with those highs that were set back in 2020. Here also you see a sideways shift for the raw relative strength line that's pulling the RRG lines lower. But as you can see, utilities still the highest reading in terms of RS ratio. So I'm still gonna judge this as a temporary setback within this longer term turnaround. And then finally, the two more growth oriented sectors, technology and discretionary, they are improving both in terms of relative, and this looks like a small bottom formation, but the longer term trend is still down, and this is not yet a turnaround of relative strength. And you will see a similar picture for consumer discretionary. I think if you have to choose between the two, my preference would be for technology. It's closer to the 100 level. It's traveling at a slightly better RRG heading, and I like the price chart a lot better because consumer discretionary is still very clearly in a downtrend. It's having trouble with its previous high, and you can see the same here for relative strength. That is still struggling to move even beyond its previous low in terms of relative strength. So wrapping it up, the defensive sectors are going through a setback. There is a short-term favor for technology and consumer discretionary, but it is, as far as I can see, a bounce within the bigger picture that is still in favor of defensive sectors. Communication services is definitely turning around. That's probably the worst sector in the universe. And energy, on the other hand, is the best sector, which seems to have completed a new low and ready to embark on a new move higher, both in terms of price as well as relative. And then now for the big news, the big announcement. As of last week, when the new update for the StockCharts website was announced, we have also updated RRG, and we can now plot relative rotation graphs using intraday data. As you know, so far we only had daily and weekly, and I was always going back between the weekly and the daily RRG, as you see it right here. Basically saying this is your long-term picture, and you can see the shorter-term picture and try to fit that in with the weekly image. What we can do now is make that daily chart our longer-term picture, our longer-term overview, and switch to an intraday time frame, let's say 60 minutes, and update that. And now I have the relationship between an intraday RRG on the right, plotting periods of 60 minutes, and we have the daily RRG on the left. So who's going to benefit from this? This will particularly benefit people who are interested in shorter term time frames. So I really hope that it's going to attract a new user base for relative rotation graphs, because they can be as powerful for intraday time frames as they are for the daily and the weekly. The only thing that you need to bear in mind, and that's no different from your regular chart set, is that the lower your time frame, so 60, 30, 10, 5 minutes, the smaller the moves, the less volatile the moves are. So obviously, when you use a weekly RRG and you're looking at the weekly trends, they can produce pretty large moves in terms of US dollars in terms of price, or percentages in terms of relative difference between the S&P and the particular sector. If you look at the intraday RRG, like the 60 minutes, you will get quite noticeable moves, but the distance traveled, both in price and relative strength, will obviously be much smaller. So please be aware of those factors when you start using intraday RRGs. It's the same with a 60-minute and a 30-minute price chart. I mean, they obviously travel much smaller distances than a weekly price chart. The image produced is exactly the same. So right here you have the hourly RRG, and just like with a normal price chart, if I would take away the time scale and the price scale and show you a chart, you would have a very hard time telling me whether you're looking at a monthly chart, a weekly, a daily, or a 10-minute chart. It's the same with an RRG. If you look at the hourly RRG as we have it right here, and I would animate it, you can see that the rotations are taking place just as if you would expect it and are familiar with as it rotates on a daily or a weekly RRG. The only thing different is that the swings in terms of percentage change are much smaller than what you will see on a daily. So if you look at the daily here, you see price swings of 5%, whatever. If you look at the hourlies, they can barely come above 2-3%. Sometimes there is a big move, but that's what it is. So if those trades are of interest to you, by all means start playing and experimenting with these intraday RRGs, because they can be very helpful to pinpoint potential trading ideas, to pinpoint potential trading possibilities. As a matter of fact, if I'm going to change this to a 10-minute RRG, which I have just done, and I would bring this one to an hourly RRG, then we have the same, but this is really short term. I can get the same moves here for a 10-minute RRG. And again, you will see the moves, but the percentage change will be much smaller and smaller and smaller. Now I do need to explain a little bit more about that percentage change and the tail length, because I still get questions on that every now and then. And what you will see here is the number of periods ending, and in this case it's July the 25th, 3 o'clock. That is the hour starting. So basically this is updated until 4 o'clock, but because StockCharts date timestamps every observation at the start of the period. So this is until the close of July 25th, Monday, July 25th. If you look here on the 10 minutes, this is updated until 10 minutes to 4. So this is the last bar, the last observation before the close. If I change this to a daily, then you will see that it's 5 periods, 5 trading days ending July 25. And if we do the weekly, then we get the 5 weeks ending July 25. But that is the week that starts on July the 25th. The percentage change is tied to the length of the tail. So here for 5 weeks, this is the percentage change. If I change that to 13 weeks, 1 quarter, then this is the percentage change for 1 quarter on the weekly RRG. If I move to 10 minutes, is still on here, you can see that the percentage change is 5 periods, so that's 50 minutes. In 50 minutes, these are the percentages change. If I make this an hourly, then I get 5 hours of price change, which you can see is already a little bit bigger. So if I make this 10 periods, that's 10 hours, then obviously my numbers go up a little bit more. So please be aware of the fact that the percentage change is calculated over the tail length of that graph. And this wraps up Sector Spotlight for this week. I hope you enjoyed the show. Please let me know what you think of intraday data on RRGs, whether you're planning to use it, whether you're interested in not, and share your experiences and how you use it, because it's a whole new era, it's a whole new way of looking at things, much more granular, and I'd love to hear your experiences and your thoughts about it. Please remember, Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern. I'm looking forward to see you again at a new episode of Sector Spotlight next week, same time, same place.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.